Hi, welcome. I'm Angus from Wise Investment. I'm joined by Ian from Whitley Stimpson, and today we're going to be looking at a couple of situations where people might be paying more than the highest possible rate of tax. So Ian, do you want to kick off?
Yeah, absolutely. So the highest advertised rate of tax is 45%, but there are a couple of situations where, and actually more common than you might think, where people end up paying 50% and even 60%. And this happens because when your income goes over certain thresholds, you start to lose valuable allowances or reliefs. And so you sort of get a double tax effect. You're being taxed on the extra income you earn, plus you're losing relief from lower down. So you end up effectively paying tax twice on the same money.
Okay, so I believe there's one to do with child benefit, is that right?
Absolutely. So for a few years now, we've had the tapering of child benefit where where one or other of the partnership couple earn over £50,000, the child benefit starts to be tapered away. And once somebody earns over £60,000, neither them nor their spouse are entitled to the benefit. So this means that if you're earning between 50 and 60,000 and you start to lose the child benefit as well as being taxed at 40%, the effective rate of tax is actually about 52, 53%, I think. So.
Right, as much as that. Okay.
It is.
Well, because I was aware, or certainly more aware from the bit of the industry I work in, for higher earners, someone earning between 100,000 and 125,000 a year, there's effectively a 60% tax rate because their personal allowance, the tax-free part, gets whittled away at a rate of, I think it's 2 for 1. So if it's 12,500, by the time that 25,000 from 100 to 125, you're losing that allowance as you go through that.
Yeah, absolutely.
And it sort of feels quite punitive, I should think.
I think you're right. It is punitive, and actually the majority of people that we see being caught by that have perhaps landed in that bracket for 1 year only as a result of a bonus or some extraordinary event. Most people who regularly earn a salary of that level have had that conversation with us because they see it on their tax return for the year and say, well, there must be something I can do about this. But where it really stings is if somebody just unexpectedly gets caught out because of a one-off bonus or something happening like that.
Right, okay, so we've got a couple of slightly different situations.
Yeah, so when you make a personal pension contribution, it has the effect of extending your various bands.
What you mean, the sort of the tax rate bands?
Absolutely.
Okay, right.
So ordinarily, you can earn up to £50,000 before you start to pay higher rate tax. By making a pension contribution, those bands get extended upwards, which means that effectively you gain more basic rate band, and you can avoid these traps of falling into paying tax at 50 or 60%.
Right, okay, so to put a simple example, if you earn £60,000 and you have children, you would normally be claiming child benefit. You make a pension contribution of 10, is that right?
Well, eight's yourself and it gets grossed up by the
eight's how much you pay, and then you get the tax relief from the government to bring it up to 10. Okay, and so by the same token, if someone's earning 125,000, they could make a pension contribution of gross 25, net 20, and then they then get a tax rebate on the recovery of the personal allowance.
Absolutely.
Okay, could be quite complicated, maybe something people ought to take advice on. I think you also, you touched on something to do with a bonus, and whether there's some other way of tackling that as well?
Yeah, absolutely. So with a bonus, if you're notified that you're getting a bonus, it might be worth considering whether you can talk to your employer. It all depends on the relationship you've got, and whether they could perhaps make that an employer's pension contribution on your behalf into your pension fund. They're likely to be fairly agreeable to that because there potentially is an employer's national insurance saving to them as well.
Right, okay, so a double win.
Absolutely, absolutely. They may even split the additional saving with you.
Right, and also the other thing that occurs to me, that sounds great actually, the other thing that occurs to me is that we talked about gift aid relief. Would that work as well?
Gift aid relief does work as well, absolutely. Now I'm sort of caveating it because of the situations we're looking at here, and lots of young families would much rather put money into a pension than perhaps have the larger sums.
Yeah, we're not kind of advising people one way or another, but it's an option, isn't it?
Absolutely, and it works in exactly the same way. So again, if there is something that you're considering or making a gift to a registered charity, then that can be a very valuable thing to do too.
Thanks for watching. If you enjoyed the video, make sure you like, comment or subscribe to our channel.